I'm Peter Reznicek from ShadowTrader.net, and this is the weekend edition. Not a heck of a lot going on in this market since last week, so I'm going to try to get you in and out of here in 20 minutes if I can. We're going to look at all those technicals. I'm going to show you some of this chop that we saw this week and why I think this is a very dangerous market right now. It could get a little bit worse because we're waiting on some big news over this weekend. Beyond that, we'll check in with what the Fed did this week and what it looks like going forward as far as a rate cut at the next meeting. I'm going to check in with that Google trade as well, which I talked about last week. Idea from one of my subscribers that actually went seriously south on us. I'm going to show you how we bailed out for a small loss, when, where, and why. In and out as fast as possible, like I was saying. Let's talk more charts. Let's do it. All right, as always, look back before we look forward. Weekend review, see what was going on with the key 11 sectors in the S&P, majors, Bitcoin, gold, bonds, rates, etc. Pretty much like small advances across the board, as you can see, right? The S&P was really flat over the course of the week. This is measured from Monday's open to Friday's close. S&P really didn't budge, basically. And this is why I was saying that, it's kind of a relatively a difficult week to trade because there was a lot of noise, sound and fury signifying nothing, as they say, and it just kind of ended up flat at the end of the week. NDX, same thing, less than 1% gain. Russell as well, less than 1% gain. Across the board, inside of the sectors, really the only outlier was healthcare. Healthcare was really weak, probably somewhat on the heels of UNH. I don't know if you guys have taken a look at that stock, but it has been plunging for a while, and it just keeps going lower, and it just won't stop, and I think that's pulling some of the other names in the sector down with it. Other than that, not really too much in terms of outliers. Staples were a little bit weak. Down, as well as real estate. Everything else just kind of flattish on the week. Bonds ticked down a little bit. The yield ticked up. That's obviously because they go inverse to each other. Volatility continues to collapse, which makes sense, especially in a market that's kind of sideways to up. Oil had a little bit of a rebound this week. All of those prices that were below $60 a barrel, that got kind of retraced, and I think we're just around that level. Bitcoin had a fantastic week. I'm looking for pretty much any pullback there now. Now that we've broken out of that consolidation where we were in the 90s, we're into that $100,000 area. And I think the peak is around 111-ish or something like that. Don't quote me on that. So looking for a pullback there, and that could also affect stocks like MSTR, Coin, etc. Right? So that's the week in review, basically. Not a lot going on, not too many outliers. I would keep an eye on that healthcare if I was you, only because it is a relatively heavy weight in the S&P, and that's important. And I think that right off the bat, just looking at that and knowing that that's happening, and knowing that that healthcare sector is weak, is giving you a lot of market generated information to tell you that there could be chop. Remember, the market being the S&P, especially if you're a futures trader trading ES, it's only going to move forward and keep going forward when all these sectors are in sync and they're kind of pushing with it. At the very least, you need the ones in the front, like financials, technology, healthcare, to be all pulling in the same direction in order to get sustained movement that's going to help your trade. So something to keep in mind as far as that. Okay, what's really going on? Here's where the rubber meets the road, so to speak. Technicals, it's all that matters. Where did the charts end up at the end of the week? How did we get there? Where are we going? So I wanted to start on this hourly of the ES, just to sort of illustrate how choppy this has been. Like, this is Sunday right here. This is kind of the start of the week, Sunday evening right here, right? And look at the hourly bars here of the entire week in the futures. It literally didn't move. Like, it's from here to here. I mean, literally it did not move. There was just a whole lot of chop. And look at the retracements. And this is what makes trading, I think, in this environment relatively difficult. Is like, look at this one here, coming down here, and then boom, this hourly bar. And then it slowly just gives it all back. And then you had this same action on Wednesday. There was some action, same thing. Look at the chop, how big it is. You had the UK signing with the UK Prime Minister on the phone when they finalized the UK deal. And this is early in Thursday's session. You have this move down early as the president is speaking with the Prime Minister. It's just going lower and lower, and then it just kind of turns, and then boom, you get this, where you get a new 2-day high, and then it just gives it all back, right? As usual, the MO of the market is that you get very emotional action, and little by little it dribbles back, and it gives back about 95% of the move. And then Friday was just a chop fest where you didn't really do anything. But overall, the main takeaway is that from where you began the week to where you ended the week, there was just a whole lot of range, but you didn't get anything for it. You didn't really even move very much at all. Let's get into the cash market to see where this just might be going. I am concerned, for lack of a better word. I'm going to take off this fib now. You can see now we closed the bar above the 61.8. The fact that we came back in, that doesn't really mean anything technically. Once you close one bar over it, that's relatively, like a sign of strength. But if I get rid of this fib to make it cleaner, I want to focus just on how we're not really advancing off of the 8. It's not a clean move off the 8. You have this pinch that happened here of the 8 through the 21. And then look, you actually interacted with the 8 right here. You pulled back almost immediately. And then 2 sessions higher, pulled back. And then here, you have 2 sessions that interact with the 8. You gap up and then hold. And so, the 8 is really the thing, for lack of a better word. And I think that from a technical level, obviously this is very, very driven by news right now. But just remember that this congestion here, my thesis is that we're going to mirror that and maybe form an inverted head and shoulders that should resolve higher. I don't really know the answer to that for sure. And remember, as a short-term trader, I don't need to know the answer to that. I really don't care. When it presents itself, I will act like that without even thinking. Those who are in my room every day and watch me trade live, they know exactly how I operate. It's like I change my mind literally on a dime. I could care less. I have no bias. I'm not a long-term player. I'm not invested, so to speak, like most people are invested in the market. So they generally want it to be up. And I think they're disappointed when it's down. And when it's down, they often make the mistake of holding on longer than they should, because I don't even think they realize it, but they have this bullish inherent bias, which makes sense if you're sitting on a 401k with all your wealth in it. It makes sense that you would inherently have this bullish bias. But since that's not my personal situation, I don't think like that. And I think as a short-term trader, to be honest with you, it serves me very well because, like I said, I'm just able to change my mind at the snap of a finger, and I don't really care what direction the market goes. It just needs to move in order to make some money from it. So that being said, what I'm going to focus on this coming week, and I think you should as well, is very simply, do you hold the uptrend, right? And how is the market going to move in terms of relationship with these 8 and 21 EMAs right here? If I just put that like that so it lines up, that's what's really important. The moment you lose that 8, you've got short-term weakness. The moment you lose that 21, you've got slightly longer-term weakness. And I talked earlier about the potential of this being kind of like an inverted head and shoulders, where this would be the left shoulder. And I was saying that if you put this line right at the same amount, you draw over the right shoulder, right? Okay, so that's all well and good. That also gives you a lot of market general information as to where this whole thing fails. Because if this whole thing starts to fail anywhere below this box, there's propensity for lower. It could certainly happen. And you then have all the overhead supply of all of this trade here, which is kind of a congestion, is going to be above you and should be ideally, or pushing prices lower, basically. Or, that's what you would think would be the outcome. But again, we don't know that. Anything can happen. We want to see how this builds out. But a lot of technical areas, I think, just ahead of us to watch very, very closely, mainly the trend line and these 8 and 21 EMAs. Okay, let's do a little play of the week update. This is an update on that last week's Google trade, which I really liked at the time. It was an idea from one of my subscribers, if you recall, from the Should I Do This Trade segment. And it was a ratio spread on the upside in Google on the call side and selling some 150 puts to pay for it. That trade actually just completely fell apart this week due to some news that really came out of nowhere in Google. And you can see how much relatively weaker Google was than the market because of this news. It happened right in the middle of the week, and essentially on Wednesday around 10:45 a.m., there was some news from Apple that search, traditional search I should say, was down due to things like ChatGPT and other AI models that were taking traffic away from more traditional search. And obviously Google got really, really smacked on that news. If you look at an intraday chart, look at this 15-minute bar here. This is just incredible. Right in here, it just completely fell out of bed, like out of nowhere. Like again, 10:45 a.m. on Wednesday, boom, you were trading around 164, which was good for us. As you know, we're long the 165 call, short 3 times the 172.50 calls, and then it just completely falls out of bed and goes from 164 to about 148 in a relatively short time. So what did that do to our trade? Well, it wasn't too bad. I think we had some pretty good management, but I wanted to give you the update on it. regardless, let me just show it to you here. Able to get out for a relatively small loss. And the reason was basically because after we put on the trade here, we actually closed half of it here with this back spread, which was the 165, 172.50 back spread. The only difference in that is just that it reverses the ratio. That's basically what a back spread is. Ratio is where you're selling the stuff out in the back. Back spread is where you're buying the back. So we were initially long the 165 call and short 3 units of the 172.50 calls, and then just reversed it with the back. We purchased that for 75 cents. We sold half of it for $1.15, which is a pretty solid gain, obviously, in percentage terms. But to finance the whole trade, where things got in trouble was that we sold double the amount of puts as we had on the calls, which is normal. I do that very, very often. Is like if I need to get the price as close as I can down to zero, it may be 2 units calls short, 4 units or rather, 2 units calls long, 4 units put short, or 4 calls, 8 puts, whatever. And as you can see, that gets the cost down to pretty much neutral, right? Paying out 150 and bringing in 148. But again, leaving us naked on those 150s, which I certainly didn't think were going to be a problem. But of course, we got this news that just came out of nowhere and just blew the chart out of the water and just completely changed everything. So we ended up closing those very, very quickly as soon as we saw that drop happening, pretty quickly. And it wasn't too bad because, as you can see, we opened those puts for 37 cents, ended up closing them for 59 cents. As you can see from the chart I just showed you, those actually went in the money, and going in the money anytime you're short is a problem, but especially when you go in the money on a Wednesday with 2.5 full days to go. Notice that that short strike was at 150. We went way below 150. So what we closed for 59 cents relatively quickly could have cost us like $2.50 to $3 or whatever had we waited until the low of the session. So that's pretty much the update with Google. I put this trade 100% into the category of what I call a good loss. There's good losses and there's bad losses. Basically, bad losses are when you make a mistake and you can go back over your trade and realize, like, you know what, I thought this was a good idea, or I thought I did the right thing, but in reality, I made a mistake here and here and here, or just here, whatever. And this isn't that. This is essentially a good loss. It just kind of came out of nowhere. Who knew that such news would come out? And it just changed the dynamic of the trade completely. And the thing to do, as always, especially if you're a newer trader listening to this, is please, I implore you, never, ever, ever play the hope card. Remember, this is one trade out of very, very many. Just in this advisory right here, we've already done almost 2,000 trades. So think about it. It's just one out of many. You need to just bail as fast as you can. The last thing I'll leave you with as you look at this updated performance sheet from the weekly room that I run is I don't like this market right now, and I'm not putting myself at very much risk. Green highlights right here mean open trades. 3 is a low number for us. We often have up to 10 trades open at once. We probably closed 5 to 6 trades just today, or coming into the end of this week. We only have 3 trades open, and more importantly, what are they and what type of risk do we have? Almost nothing. I mean, we're short 975 puts in here in Netflix, which are a mile away for a nice credit of 60 cents. We've got a Netflix upside call ratio. It's now morphed into an unbalance. The net cost of this is about $1.64, and this spread was trading about $1.85 at the end of today. I'm not really too worried about it, nothing there. And MSTR, as you know, is going to trade with crypto. These puts are very far away, and you may be asking yourself, what's the point? The point is that a 50 cent and a 40 cent premium is actually pretty healthy for something that has almost no chance of going in the money. And so because this stock has such incredibly high implied volatility, I feel like you might as well take advantage of it. I'm not a big proponent of selling very, very cheap premium that's very, very far out. I like to always sell my premium wherever it is on the chart that's technical, and however much that's worth, it is what it is. Obviously, if it gets down below like 30 cents-ish or so, I'm not really interested. And this obviously is above that threshold, but this just kind of made sense to me because if you look on the chart of MSTR, there is that strong support at the 240 level. And because we know that it's going to trade lockstep with Bitcoin, and Bitcoin right now is breaking out of a consolidation to the upside, the odds of retracing that move and retracing the whole consolidation and going all the way back to like Bitcoin, 75, 80,000 or whatever it would take to bring MSTR to here are probably super duper low. And as always, trading is just a game of odds, and that's what you do. But again, my main takeaway from showing you this where we're at right now, like fully updated, which we do every day, is the fact that I don't like this market right now, and hence I don't have a lot of debit outlay, and I also don't have a lot of directional outlay. Like if I like the market and it's trending, I will easily be in 8 to 10 trades at the same time, all in the same direction, many of which will be risk reversals, meaning I will be selling put premium in order to buy call premium and just let it all ride all week. But this is not that, right? So one of the main takeaways I think that people who are in my room are always pretty psyched about is, they kind of follow, if not my exact trades, they follow how aggressive I am and when. And this is a clear case of a time when I'm just not aggressive, and hopefully my subscribers are not very aggressive as well. Obviously, many of them are not trading, exactly what I trade. Some of them do, but most people have a bigger portfolio of other trades outside of the advisory. But I try to always tell them that it's probably a pretty good idea that when I'm stepping on the accelerator pedal, you should do so as well. When I pull back a little, it's usually a good time to pull back as well. And I think we would all agree, as we showed in the beginning segment of the show, how choppy that hourly chart is of the ES right now with those major back and forths, plus the news with the negotiations with China happening this weekend on the tariffs. It's just not a good time to be heavily overexposed in the market. The market will eventually give us better signals, and then we can act upon those signals when and if they come. Okay, Fed Watch, real quick. What's the Fed doing? We had a meeting this week. That's why we got to do a Fed Watch in this particular show, because on Wednesday, the FOMC voted to keep rates the same. So they didn't budge again. But of course, the market is a discounting mechanism, and all that matters is what is the outlook for later, essentially. Are we still going to get cuts this year, and when? And what's really noteworthy about this is our next meeting is right here, June 18th, and it is not showing us any sort of probability really, or any noteworthy probability that they're actually going to do anything again. So I think we're going to be waiting until after June. Keep that in mind. There's now only a 17% chance that we cut. And I like to look at how this probability shifted over time. So obviously this target rate here would be 4 to 4.25, and it's actually moved down. Like a month ago, the market was pricing in about a 60% chance that we were going to move down in this particular meeting. And then a week ago, that was marking only 34%. And you can see where we are now. We're basically at 17.3%. So basically the Fed is saying not yet. They're being very, very data dependent, kind of waiting. And as we know, there's a lot of cross currents to that data right now because of what the tariffs are doing. And also remember, the Fed wants to be careful here because they don't know exactly what the outlook is going to be, or I should say what the outcome is going to be of these tariffs as they are implemented. How much of a shock is that going to have to the economy, and what do they need to do or not do, and how is it going to affect inflation? So it's basically, bottom line right now is the market, or the Fed rather, I should say, is in a holding pattern. Nothing's going to happen probably at the June 18th meeting. This is obviously an active chart here that moves and shifts all the time as policy changes. These Fed funds futures obviously are moving. So I would say to you out there, check in with this chart relatively often. I would say every few days, because it does matter, obviously, because the market's going to be keying off of whether or not they have a chance of getting a cut soon or not. But right now, as we speak, at the end of this week, looking like a less than 20% chance that it is happening in June 18th. Okay, looking ahead to next week in terms of economic data and earnings. Earnings are kind of drying up. Remember, I only talk about earnings that I'm interested in, bigger companies, ones that I would trade, stuff that I think might have an effect in a bigger picture on the market. So earnings-wise, I'm only listing Applied Materials and Walmart, basically here, both of whom are happening on Thursday, so that is somewhat noteworthy. Wednesday is a quiet day. There's no economic data nor earnings of note. Monday is going to bring us ISM services. This is important. This is an inflation number. This is core CPI, consumer price index, and CPI. That's important. And then Thursday is also going to be the producer price index. These are important, as is the unemployment data. But I would say these two here are most important, since everybody's kind of watching what's happening with inflation right now. And that also affects those Fed funds futures we just talked about in the prior segment. That's important to note. All of this maybe should be taken with a grain of salt, because you have to understand what the ruling reason is right now. And right now, the ruling reason or sort of spirit of the time of what's happening is that the market is very jittery on tariff policy and potential policy and what the changes are going to be and whether or not there's going to be some announcements on that front. So just keep that in mind. That's really what the market is keying off of. I call that ruling reason. And you have to really know what that is at any given time. So the important thing is not to focus on data that might normally be quite important, but that currently in the market that we're in right now, the market might not be caring very much about. So it's very, very important to understand, what the market is feeling right now at the moment. And that's the show for this week. Thank you so much for hanging out, spending a little bit of your weekend with me. Just to recap where we're at, market didn't really move very much at all this week. Just a lot of chop back and forth, and I think that chop may continue. Most importantly, let's see how next week opens up after the Sunday night futures, because we've got that big meeting happening this weekend where there's going to be a start, at least, to some trade talks between the U.S. and China. So that's going to be very, very important. I think the market's going to be keying off that. I, for one, am going to be very interested to see how the futures are reacting on Sunday night, right? From a technical level, you're still above the 8, still above the 21, but you're going kind of nowhere fast. And that type of situation often lends itself to falling back down below those moving averages. I'm going to keep that in mind. And I'm also going to be keeping that bigger picture in mind of that inverted head and shoulders on the market. You got the left shoulder, you got that big move down, you got the right shoulder building out. Do we build out that right shoulder and then just move higher? Or do we start to fall down below that uptrend, which maybe would cause some overhead supply and bring some sellers into this market? So a lot to kind of think about there, all right? Remember to hit those like and subscribe buttons if you can. Also the little bell icon to be notified whenever ShadowTrader.net posts new content. Again, thanks for listening. I will see you next week. I wish you good trading and good night.